Good morning, traders, and welcome to BCR's morning market analysis. Let's dive into the latest movements across the dollar index, crude oil, gold, and the Australian dollar. First up, let's have a look at the US dollar. The DXY broke below 99 on Monday, touching a 1-month low at 98.69. This came after President Trump delayed a proposed 50% tariff on the EU until the 9th of July, following talks with the EU Commission President Ursula. While this eased some immediate trade tensions, Trump's broader stance continues to fuel market uncertainty. He also threatened a 25% tariff on iPhones not made in the US, which further rattled sentiment. The dollar remains under pressure as shifting trade policies weigh on investors. On the technical side, short-term momentum indicators have a bearish turn. The RSI is now below 40, and the 7-day and the 20-day moving averages have formed a death cross, pointing towards a potential further downside. Next, let's talk a bit about crude. WTI slipped slightly to around 61.30. The delay in tariffs between the US and the European Union helped ease fears of a full-blown trade war, which could have hurt global growth and energy demand. On the other hand, geopolitical tensions are still providing support. Israel has announced plans to occupy 75% of Gaza within 2 months, raising fears of a broader conflict. Meanwhile, limited progress was reported in nuclear talks between the US and Iran in Rome last week. Technically, oil is bouncing within a narrow range between 60.42 and 61.81. The RSI remains neutral around 49.5, showing a lack of clear directional momentum. A breakout above or below this band could definitely define the next trend, but for now, the market forces remain mixed. Next, let's have a look at gold, which hovered near the 33.40 per ounce level as easing trade tensions briefly reduced its appeal as safe haven. Lingering concerns about inflation, debt levels, and the potential for renewed trade disputes continue to support gold prices. Looking ahead, the FOMC minutes due Wednesday will be closely watched and could give us a good sign on what's happening next. Technical indicators suggest that momentum remains strong with the RSI at 56.8, still well below overbought territory. Key resistance lies at the psychological level of 3,400, while support sits around $3,300. Lastly, let's have a look at the Australian dollar, which rebounded towards 64.85 as the US dollar weakened amid rising trade concerns and continued sell the dollar sentiment. The Memorial Day holiday in the US also meant lower trading volumes, but broader fiscal worries in the US, especially after Moody's downgrade of the country's credit rating, continue to weigh on the greenback. Technically, the Australian dollar is forming a bullish flag pattern after rebounding from the near 50-cent level in April. The RSI remains supportive above the neutral line, and the MACD has turned positive. A clean break above 65 cents could pave the way towards levels that are way higher, but traders remain cautious for now. Well, that's all for today's update. Stay tuned, stay sharp as the markets digest shifting headlines and technical cues. We'll be back tomorrow with more insights. And as always, manage your risk and happy trading.